Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Industrial and Commercial Bank of China Limited Annual Report. Industrial and Commercial Bank of China Limited offers a wide range of banking products and services to both corporate and individual customers. The bank operates through three main segments: corporate banking, personal banking, and treasury operations. The corporate banking segment provides financial products and services such as corporate loans, trade financing, and wealth management to corporations, government agencies, and financial institutions. This includes deposit-taking activities, custody, and various corporate intermediary services. In addition to corporate banking services, the bank also offers personal banking services to individual customers. These include deposit-taking activities, personal loans, card business, and personal wealth management services. The bank provides various personal intermediary services through its internet and mobile banking platforms. The treasury business segment is involved in money market transactions, investment securities, and foreign exchange transactions. The bank also engages in fundraising, asset management, and other businesses such as financial leasing, insurance, debt-for-equity swaps, and wealth management products. Overall, Industrial and Commercial Bank of China Limited provides a comprehensive range of banking services to its customers, both domestically and internationally. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for ICBC can be summarized into several key areas. Firstly, the bank has seen significant growth in its net interest margin, NIM, due to stabilizing NIM and an increase in loans to key fields such as technology finance, green finance, and inclusive finance. Additionally, ICBC has expanded its global operations and integrated services, which has led to growth in cross-border transactions. The bank's digital transformation efforts have also contributed to revenue growth, with the use of AI and new quality productive forces empowering high-quality development of settlement finance through the AI Plus action plan. Furthermore, ICBC has launched various innovative products and services, such as the MasterCard 10+1, multi-currency debit card, Chinese Zodiac card, and ICBC iBonus Point Unified Customer Rewards Platform. The bank's expansion into new business areas, including funds of funds, FOFS, and alternative asset management, has also contributed to revenue growth. In terms of specific numbers, ICBC has seen significant increases in interest income on government bonds, with a plus 83,771 increase in 2025 and a plus 64,747 increase in 2024. The bank's balances of PRC government bonds and special government bond have also increased significantly, with a plus 1,408,452 increase in 2025. In contrast, there are no mentions of revenue decline in most pages, indicating that ICBC has been successful in driving growth across its various business segments. The net income of the company experienced a slight increase from RMB 366.9 million in 2024 to RMB 370.8 million in 2025, representing a 1% growth. However, this modest rise is overshadowed by the decline in profit margins across various segments. The operating profit margin decreased from 53% in 2024 to 52.4% in 2025, indicating a slight erosion of profitability. Furthermore, the net interest margin also declined from 1.42% to 1.28%, suggesting that the bank's ability to generate income from its lending activities has been compromised. On the other hand, there are some positive trends worth noting. The personal banking operating profit margin increased significantly from 23.4% to 33.4%, indicating a strong performance in this segment. This growth can be attributed to the company's focus on expanding its wealth management services, which have seen an increase due to market opportunities. However, the decline in corporate banking operating profit margin from 58.1% to 48.7% is a cause for concern. This decrease can be linked to the bank's decision to adjust fee rates proactively, leading to a decline in income from guarantee and commitment business products. Additionally, the company's investment banking and bank card businesses have been affected by external factors, such as changes in market environment. Overall, while the net income has seen a slight increase, the decline in profit margins across various segments raises questions about the company's ability to sustain its growth trajectory. The company's financial performance has shown a significant improvement in generating positive operating cash flow. A comparison of the net cash flows from operating activities reveals a substantial increase from RMB 579,194 million in 2024 to RMB 1,890,530 million in 2025. This upward trend indicates that the company is efficiently managing its operations and generating sufficient cash to cover its expenses, resulting in a positive operating cash flow. The company's debt level has undergone significant changes over the years. Initially, there was a substantial increase of 45.5% from RMB 58,897 million to RMB 86,272 million between two unspecified periods. However, subsequent reports show more modest growth, with an increase of only 10.8% from RMB 19,414,509 million to RMB 21,503,478 million. Furthermore, the total financial liabilities skyrocketed from RMB 178,111 to RMB 49,385,617, indicating a substantial rise in debt. Regarding interest expenses, there is conflicting information across different pages. Some reports suggest a decrease of 11.9% from RMB 790,543 million to RMB 696,705 million. In contrast, other statements indicate an increase in interest expense on debt securities issued by 15.6%. Additionally, interest paid on debt securities decreased from RMB 52,973 to RMB 58,416. However, it is worth noting that interest expenses have increased significantly from 2024 to 2025, rising from 2.02% to 3.27%. Management is emphasizing a long-term growth strategy for the company, focusing on reform and opening up to serve China's modernization. The overall goal is to build a financial powerhouse within the next 5 years by serving the broadest customer base with targeted business strategies and services. In terms of business expansion, management is prioritizing efforts in key areas such as technology finance, green finance, inclusive finance, pension finance, and digital finance. This includes promoting public service platforms and expanding global presence through custody services. Risk management is also a top priority, with a focus on strengthening the enterprise risk management system and making breakthroughs in digital risk control capabilities. A general reserve will be maintained to partially cover unidentified possible losses. Innovation and technology are driving growth, with a focus on applying AI technology to various scenarios and upgrading service frameworks for trading-based financial products. This is expected to seize opportunities in RMB internationalization. Financial performance is also improving, with increases in realized gains on bond investment and other non-interest-related gains. Professional capabilities in investment research will be enhanced, along with investor protection and education. Finally, management is emphasizing the importance of upholding high-quality party building to guide development and promote the party's leadership across all areas and levels. The company's financial activities have been marked by two significant practices. Firstly, the company has a history of paying dividends to its shareholders. This is evident from multiple references in the provided summary, indicating that dividend payments are a regular occurrence. In addition to paying dividends, the company has also engaged in share buybacks. This practice involves purchasing shares from existing shareholders, which can help to increase earnings per share and boost investor confidence. The company's decision to undertake share buybacks suggests a commitment to returning value to its investors through both dividend payments and strategic capital allocation. That concludes the financial summary for Industrial and Commercial Bank of China Limited. Feel free to comment below, and I will be happy to answer them when possible.